Hello and welcome to EuroScope Finance, your daily guide to the global markets. Let's dive right into today's action. It all started as a quiet Monday, with U.S. markets largely closed for Veterans Day. But by the time the closing bells rang elsewhere, investors had a lot to chew on. Over in Washington, a new temporary funding bill made its way through the U.S. Senate. The goal: to keep the government running well into the new year. While this move helped soothe some immediate worries about a shutdown, the market's reaction was lukewarm. All eyes are now on the House of Representatives to see if the bill gets the final green light. This uncertainty kept the lid on any major celebratory moves. Across the Pacific, Asian markets kicked off the session with a burst of energy, riding the wave of Wall Street's recent rally, its best performance since June. It felt like the optimism was contagious. However, that early enthusiasm started to fizzle out as soon as Chinese markets opened for business. A wave of caution washed over the region, erasing most of the initial gains and reminding everyone that a single session-S rally does unsignal a permanent shift in sentiment. Traders quickly pivoted from a risk-on to a more defensive stance. Now, let's look at commodities. Gold, often a safe haven in uncertain times, mirrored this cautious move. The precious metal pushed higher, testing the significant $4,150 mark as investors sought stability. Meanwhile, oil prices finally found some solid ground after a roller coaster week. Prices stabilized and entered a consolidation phase, holding steady as the market digests recent supply and demand news. It seems traders are taking a wait-and-see approach before making any big bets on crude's next direction. Trade talks also remained a hot topic. U.S. officials hinted at a possible review of certain tariffs. Though they kept the specifics under wraps, this sparked some discussion but didn't provide enough concrete detail to really move the needle. Elsewhere, Japan delivered a pleasant surprise with its latest current account data, which came in stronger than expected thanks to a boost in exports and healthy investment returns. And from China, reports are circulating that Beijing might adjust export rules for some critical materials. This is seen as a strategic move to help balance global supply and demand chains, and it's something the world will be watching very closely. So, what's on the agenda for tomorrow? Tuesday, November 11th. Well, market activity might be a bit more subdued, as holidays are being observed in Belgium, Canada, and France. But don't let that fool you. There are still several key data releases that could stir things up. The UK is set to release its latest employment and wage figures, which will give us a fresh look at the health of their labor market. Over in Germany, the highly anticipated ZEW survey will offer a crucial glimpse into economic sentiment among financial experts. On the policy front, we'll be hearing from a full lineup of speakers from both the European Central Bank and the Bank of England. Their comments will be dissected for any clues about future interest rate paths and monetary policy direction. With market supply limited to just a Dutch bond auction, investors will be laser-focused on these macroeconomic indicators and policy soundbites to guide their next moves. It's a day where words will likely speak louder than trades. Let's shift gears to the headlines driving the market mood. In corporate news, we saw a flurry of activity. Several major companies in both the UK and the US announced leadership changes and strategic reviews. These moves seemed to renew investor confidence and provided a nice lift to equity sentiment. In fact, London's FTSE 100 briefly touched a new record high, fueled by a wave of global optimism. Investors are feeling hopeful that recent fiscal measures could support economic growth, all the way into early 2026. European banks, however, had a more mixed session. They saw some choppy movement amid swirling speculation about potential regulatory adjustments on the horizon. The energy sector also found itself in the spotlight, facing a renewed debate over investment direction and the ever-important sustainability targets. In the world of global finance, there was some good news for retailers. Payment giants announced they're making progress toward lowering transaction fees, a welcome development for businesses. And for long-term investors, leading market figures reaffirmed their confidence in upcoming management transitions and promised steady capital returns, offering a dose of reassurance. So, to wrap it all up, what's the big picture? Global markets are in a delicate balancing act. On one side, we have optimism fueled by the temporary resolution of the U.S. funding issue and some strong corporate earnings. On the other side, we have persistent caution driven by worries about inflation, future policy shifts from central banks, and the complex world of international trade dynamics. The relief we're feeling is real, but but so are the underlying challenges. The next few trading sessions will be critical. They'll reveal whether the upcoming data from Europe can sustain this fragile recovery narrative, or if investors will get spooked and retreat back into a more defensive risk-off mode. The tension between hope and fear is palpable, and the market's direction hangs in the balance. It's a story that's still being written, and every piece of new information will be a crucial plot point. Thank you for joining us at EuroScope Finance. We're here to decode the markets, one story at a time. For more daily market insights, global updates, and in-depth analysis of Europe's financial landscape, don't forget to subscribe and tap that bell icon. That way, you'll never miss a moment from the fast-paced world of finance. We'll see you next time.